all of these questions to Kumar Rakesh of BNP Paribas, who's joining in. Rakesh, good morning. Thank you for joining in. Now, which side of the camp are you in? There is always almost consensus that growth will still take a while to recover. But do you see that this downgrade cycle that has been on is finally coming to an end, or do you see some further downticks before a floor is hit eventually?
Hi, good morning. So from the camp perspective, for the last 1.5 years, we have been quite counter consensus positive stance on the IT sector. Late 2022 is when we turned quite optimistic on the sector, and there were multiple reasons at different stages. The reasons have been different. But we, as Rima was talking about, and you also noted, we don't think we have reached the stage where we could start calling out there is an earnings upgrade to start happening for the sector. And we think the first leg of the stock performance will actually be driven by valuation. And within valuation, it will largely be driven by the sector weight across investors moving up. If you look at the holding of IT sector, both by foreign institutional investors and domestic, it's in multi-year, possibly more than a decade low that we are looking at. Among FIs, it has fallen to about 8.5% of their holding. Long-term average has been about 12.5%. Similar is the case with the domestic institutional investors as well. It's close to about 8.5% for them as well. So there is a significant bearishness for the sector, which is built into the sector positioning across both sides of investors. And that, as the incremental confidence starts building in that the outlook is incrementally improving and not necessarily further deteriorating, this weight will start moving up. Because if you look at the weight, what exactly it is telling you, it's telling that the outlook is going to further deteriorate, and that's why there's a significant underweight positioning in the sector. And hence, even a neutral or normal outlook would be good enough for the sector weight to start moving up. And that would be the first driver for the sector stocks to start moving up. The second leg, which we think will start playing out possibly later this year, early next calendar year, is when the Fed starts cutting rate and the sentiment among enterprises starts changing. And that is when we would expect that the earnings upgrade cycle will start playing out, and that will be much more sustainable. And going into next year, we would start seeing the earnings upgrade driving the sector performance.
Just a quick word on the annual guidance. Do you also expect this quarter guidance should be maintained? And do you think at least at some point, maybe in the second half of the year, there is scope for an earnings, for an annual upgrade to, say 1 to 3% for Infosys or, 3 to 5% by HCL Tech? Can the full year guidance be upgraded?
Good morning, Rima. So for the quarter, we don't think there has materially changed from last quarter to this quarter for companies to start changing their full year guidance as yet. But as you pointed out, there is definitely a potential that some of the companies could raise their guidance as we move through this year. And what could be the catalyst for that? If you look at the CEO confidence surveys in the US, there's something remarkable which is showing up in those surveys. The overall confidence of CEOs over the last couple of quarters has been consistently going up, both on the overall business as well as their own revenue and sales outlook. So they are generally turning more positive about how their business is going to do in the next 6 to 9 months. But the same survey, when looked at from the CapEx spending perspective, has largely been flattish or maybe coming down. So there is a gap which is building up in the CEO's outlook about what their business could be and what their spending could be. And why is that happening? Possibly because Fed has not started cutting the rate. They are not confident on starting their CapEx cycle at the peak of the rate cycle, and hence possibly waiting for the indication from the Fed. And that's why we think once Fed starts cutting rate, there could be a catch up on the CapEx side. And hence there potentially could be a buildup of the pent-up demand into the system, which may start coming out towards the end of this year or possibly early calendar year. And once those conversations starts happening, there could be a potential of revision of these guidance as well upward.
You said a few companies might raise their guidance. Which ones and which are your bets, preferred picks in the IT sector?
So our preferred pick is Infosys. The guidance what currently is given anyways does not include the acquisition. So once that gets built into, anyways the guidance will have to go up on an overall basis. But more importantly, the expectation is set quite low, 1 to 3% with multiple mega deals ramping up. From that perspective itself, there is a potential for Infosys to raise guidance. It's not something which we are building or we are expecting right now. But if one have to identify a company where there is more upside potential, upside risk, it would definitely be Infosys. And that's also our top pick.
Right, Rakesh, thanks a lot for joining in and sharing with us your views on how the IT sector is likely to perform in the first quarter of FY25. Remember, earnings season begins on Thursday with TCS followed by HCL Tech on Friday. But time for a wrap on this edition of Trading Hour from Rima, me and the team that put this show together. Thank you so much for watching. Halftime report up next.